mentioned it, I'm going to kind of move a little away from integration and focus on the next gen member strategies. And Torquedo, you mentioned next generation banking, right? And McKinsey, over the last couple of years, came out with an interesting point that credit unions face challenges in attracting younger people. And part of that is the aging of the boomers and the current members, and then we've got these digital natives, the digital borns that are expecting way different experiences than what I do. Um, so I want to talk a little bit, and Bill, I'm going to come to you. When we think about creativity and we think about next gen members, I know you're working with credit unions on youth banking initiatives. Can you tell us about that and how can that really meet these digital borns where they are and draw their families in?
Thanks, Lisa. That at Kachinga, that's really our ultimate goal is to serve you really that future generation of members through financial education. One of the things that I'd like to start with as we look at this, we need to look first at some of the data and some of the numbers. So today, what I've heard is that we see over 94% of the US population is considered banked. The gap of that unbanked typically includes both that older and younger generation, along with, outliers where maybe low to moderate income households. But we do understand that there are the needs to serve the youth. The other interesting data point before I talk a little bit further about this is we've heard that there are surveys saying that 65% of American adults really don't have the desire to change bank accounts. And so with that in mind and looking at the large population being already banked, it really becomes a challenge to think through what are the costs associated with acquiring those new members. And so one of the things that we'd like to encourage the credit unions that we talk to is to really look within. Today, when we talk to credit unions, we hear that 3 to 8% of those accounts typically are child or youth accounts. That's quite different than the numbers we see across the country, where 39% of the kids have savings accounts. And so there's definitely opportunity to expand just within, the credit union's own footprint. And I realize we talk about the aging member, but we still believe that there's a significant opportunity to look within. And that's just talking about the opportunity for youth and the future of lifetime members. But on top of that, that creates a little bit more stickiness with existing members, right? So if there's a member who's an adult with a family and they're using some type of program for their youth, there's also opportunity for them to start using the credit union as their financial institution of choice. And so I think that's kind of a twofold opportunity. And then back to Raj's points earlier as well. I mean, there's other products that the existing members need. It's not just youth accounts, but it's a wide variety of technology needs that serve that next generation of member, and then also help improve overall technology and efficiency.
Raj and Sue, any comments about youth banking and the opportunity there?
Yes, I can take this. So Bill was right? So there is a gap in youth banking. So if you look at generational banking as a whole, all the way from, if you look at all the products and services, a lot of the credit unions and banks offer, a lot of them are pretty much commodities at this point, right? And if you, do some introspection, you'll know that there are gaps in products and service. Every institution is different, but for the most part, you see that there is a gap when it comes to youth banking, and people are beginning to also start talking and addressing the wealth transfer, right? So there's an impending wealth transfer. So I'm assuming a lot of that wealth is going to end up in some of these youth accounts, right? Or millennial accounts, or other accounts. But there is an impending wealth transfer. And on the flip side, on the other spectrum of youth accounts is the older generation who are preparing to retire and with trusts and retirement assistance, long-term medical. There are so many other products and services that for the most part, as a credit union or a bank, we don't offer them. Right? Maybe some do, but for the most part, there are gaps. Like youth banking is a gap. The other end of this generational banking, there are gaps. So there are opportunities for credit union and banks to venture into new areas and create new revenue streams. Having said that, on the youth banking side, there is a statistic that's, I think, I've heard it multiple times, that almost 65 to 75% of the American population is financially illiterate, right? So the idea of youth banking is so critical because the kids, including my own daughter, who have graduated high schools and colleges, and they're also working, have very little financial literacy they have very little financial literacy. So they're still, the parents still have to help them with all of their banking needs. So what that tells me is that they're not getting adequately trained in high schools and colleges. But what I heard from my daughter is firsthand that financial literacy is critical. Yeah, I went through all the classes. None of that stuck. However, it's not contextual.
Mm-hmm.
So they want to learn about it when they need it. So that was my takeaway around financial literacy when I was talking to my daughter, right?
Yeah.
So the fintech products that focus on financial literacy need to make that more contextual.